So, Dylan, what have they found?
basically we have to hold 55% of the risk we have to hold on that loan. The current PMILES construct allows us to apply a 30% multiplier to that, so we only have to hold about 16% of the risk. So that is a benefit. There are some other things that we want to have cleared up in this proposal, but those takes time.
Let me pause here. Are there any questions?
Hello.
How's it going, Larry?
Good. I wasn't sure if my audio was not working or what. I didn't hear anybody talking.
Same here.
And who wants to be the first one to talk, right?
Oh man, yeah. It looked like Julie hopped on and then she didn't have her audio working, so I was waiting to hear her talk.
Hello? Hello?
Hi, Katrina.
Hello.
Oh, hi, you guys are hearing me? Sorry, I was testing mine. Oh, I don't know if I put earphones in. It's the first time I've used them, so I'm just trying to see if I'm talking through this or talking through the computer itself.
So, Joe, have you been released from Chelan?
Well, we were in Enumclaw for a little while to hang out with Emily's parents, and then we've come back to Chelan now, but my whole family is over here at this point, so we pretty much stayed away from everybody for, I don't know, 2 or 3 weeks, and then like we all did that, and then now we're in Chelan together for a week or so.
Hey guys,
Yo.
Hey,
sorry,
Julie.
I'm out on a property here, starting to meet my stager here in a bit. The plumber next door parked in our spot for the staging van, damn it. Having to do some arm wrestling out there. How's everybody doing?
Good.
Got my glasses on. Hi, Marissa, can you hear me?
Yes, I can hear you loud and clear now. How's it going?
Yeah, sister. It's good. Sorry, guys, I haven't even taken a shower today. That's what I like about this. Everything's forgiving, right? Right on. At least I don't have like a Mr. Potato Head in the background today.
I guess you didn't look behind you. No, I'm just kidding.
Right. No, that's me. That's my face, Marishka.
Oh, okay.
Thanks a lot. Jeez, Louise. Now I know. All right.
Hey, Marissa, I haven't seen you in a while.
Hi,
Oh,
how's it going?
I guess I don't have my video on here. So this is Marishka. Hello.
Hi, I recognize the voice.
Oh.
I'm logged in from my phone as well, and so I can only see one screen at a time.
I have that
No worries.
distinctive voice and laugh, unfortunately. So
It's a great laugh. I love
Oh,
big
thank
laughs.
you.
Yeah, I was just gonna say that's fortunate, man.
I remember one
everybody
time my mom and I, we had this thing where we used to go, I don't know why, we were just weird, but we like to go to a card shop and we would just sit and look through, greeting cards and we'd just laugh and laugh and laugh. And one time a friend of mine from high school was on another, couple of aisles over and I heard, that's got to be Marishka. It's like, oh no. Anyway.
Good stuff, man. How's everybody doing? Katrina, how's it going? Anything exciting going on? I didn't put the word out early like I normally do because I've been so busy. I don't know about you guys, but the real estate business is busy right now. I am busy, so I slacks this week. I don't know why it takes we have email reminders. People are on our stuff and you still have to remind everybody if they want to jump on it, or they have to be reminded, the night before or the morning of, or people, just happens to be the way it goes with these online meetup type things. But I appreciate you guys jumping on. We might keep it short and sweet today just because I think, I know I'm busy. I'm starting to sweat sitting in my car already. So just want to see if anybody has anything going on this week. Anybody have any questions they need help with? Anything? Anybody?
It seems like I'm getting talking to people. There's a much greater sense of confidence lately, and I'm just wondering if that lenders are, if there's any change or movement in lenders and their availability to or their willingness to lend on these projects right now.
Are you talking about investment
For
lending?
investment, yeah, investment lending.
Yeah, I actually think that's the number one topic right now, kind of myself. When I think about kind of what's everybody talking about right now, I do feel that, it is on who's lending and who's not just lending, because it seems like there's a lot of lenders that are lending out there. It's just that, I think even the most experienced investors have just taken a hit in regards to the amount of equity they need to put down in order to borrow, right? And so, for some of my bigger investor friends, that are even doing 10 or 20 deals at one time, they're pissed because, it's a relationship business and they feel like, the relationship part's not kicking in right now on their level of experience and so forth, right? Because I think the fear or the caution is still there, and maybe it's warranted. It doesn't seem like it in our market, but again, we are talking about 6 months down the road or 4 months down the road when maybe their flip's going to be, coming back on the market. So I am aware of a potential lender that might be willing to lend at those more affordable rates with less down, but I'm having them talk to one of my top clients right now to kind of flush it out, right? If there's anybody I think that they would lend to, it would be this guy. And I'm not ready to tell anybody yet just because it hasn't been flushed out yet. But are you in need? Are you having trouble? Do you need some loans right now, Katrina?
We're pretty much just using cash, but so that's limited us in what we can do. It just seems like our lenders who we've used in the past, they're all of a sudden their points are ridiculous and so are their rates.
Right. Who is experiencing that in a big way is my friend Ryan Gibson, right? Awesome track record, performance record, very, very dialed in group, and they're even having trouble on some of their bigger projects, or they're way down in line. There's 30 loans ahead of them or something like that, right? Elisa just jumped on. She might be able to pop in. Hey, Elisa.
Hi, Julie.
Katrina was just talking about updates with lending, and you guys kind of play in the same world a bit. Have you, what's up with lending on your end of things? Do you guys know each other, Katrina and Elisa?
Only via social media.
Yes.
There you go. Now, hey, Elisa, meet Katrina. Katrina, meet Elisa. Two powerhouses. They get a lot of crap done on and varied deals too. You know, bigger deals and Elisa, what's up from lending in your world?
Well, so for lending, I think everything's still the same with commercial. So I'm speaking for mostly commercial. I work with direct lenders like Arbor or brokerage, kind of like Meridians and whatnot on the bigger apartment buildings.
Let me just say, like, what is Katrina? What do you need a loan for right now?
Yeah, just pretty much some rehabs, nothing long term, just short term, in and out.
Okay, so that type of stuff. All right. That's kind of the other guy I'm talking about, but I still want to know what you're saying, Elisa, on the apartment side.
Yeah, so and Katrina, by the way, I'll introduce you to Paul Long from like Timberland Bank if you haven't talked to him before. So
that's
just
great.
make a connection. I think he does mostly small business loans and et cetera, but also commercial lendings and et cetera. So I think he might have some other sources, whatever. It might be a good person to connect. But with commercial lending, I mostly deal with agency lending or the large, big, like bridge loans or whatnot. So no change on there. I think bridge loans, obviously the points are lower. So for the deals that we had a bridge loans on, yay. You know, but for agency loan, I think people are seeing 12-month reserves are required now. So Fannie and Freddie. Freddie requires 9 months. Fannie requires 12 months on reserves. And if you have really small deal, which typically it's harder to get stuff done, we're talking about like maybe $1 million to $2 million range on lending. They may even ask 18 months reserve. This changes underwriting when we get into a deal quite a bit because there's a lot more cash up in the front, right? So that's kind of what's going on with the agency stuff. But also personally, I've actually, based on Katrina's post, actually, I've kind of looked into applying for forbearance for residential I still have a few residential stuff, just for cash management. So I asked my lender, my agency lender on commercial side, because you don't want like applying for forbearance and then be stuck with not be able to refinance all the other stuff, which is true for residential. We actually had a webinar with Cody Touche from Caliber on that to address that. Yeah, so if you did apply for forbearance on residential side, it would affect your ability to do refinance on all the other stuff. How it impacts your credit score is still unknown. Because everybody kind of reports it up differently. But for me personally, you know, I quit my W-2 job last year. I don't do residential lending stuff anymore. I only do commercial agency loans. So they're non-recourse loans. So they're not personal guarantees. So I asked my lender, I was like, hey, I'm thinking about doing forbearance on my residential just for cash management and tag on the payments, basically taking a 12-month off and tagging on at the end of the loan, right? I was like, how is that going to affect my credit scores? How is it going to affect my commercial lending ability on non-recourse loans? And he's like, it's not going to be affected at all because we don't look at it. And this specifically is to do with if you have large apartment, you're thinking about doing non-agency, like agency non-recourse loan, based on my direct lender from Arbor, apparently this doesn't really matter. So for folks who are thinking, have things on both sides, you know, obviously you only take it when you need it. There's the other philosophical discussion. But when we just look at financials, this could be a way to kind of boost cash management. If you have some residential holdings, you could put them on forbearance as long as you're not doing refinance and all the other stuff in the residential world. And if you do apartment syndication like what we're dealing with, we use the agency loans, the commercial side of non-recourse loans, then it sounds like the lenders are not really looking at them. Yeah.
Interesting.
Yeah. So
did you do a webinar on that topic?
I did not, because it was just like a couple sentences, right? But we did do a webinar on residential lending. So Cody actually dived into what forbearance actually means to refinance. And, you know, this is a month back then, they didn't have the option of tagging on at the end. But most of the lenders sounds like, because I'm actually in the process of, you know, applying them, but most lenders sounds like it's like either you do a 90-day and you just keep on renew for 12 months, or they give you like a 6 months and then you renew once. But looks like it's actually really easy to do. They've already done their streamline, like literally you just go like fill a form and then right away they put you on the forbearance. And getting off it, obviously you can continue to make payments if you want to, or if you decided not to make payments, I think it, you know, getting off it, I think there's a 3-month delay on that effect. But Cody did in our episode talked about the implications of refinance and all the other stuff. So it may be something. Yeah,
we've been talking. We have had Keith on every week with us, you know, and talking about that sort of thing. And I think we can. Did you record it? Did you record?
Yeah, I have the recording. Yeah.
So maybe I'll listen to see if it's any different than what Keith's been talking to us about. But
probably the same. Yeah, it's probably the same. But the interesting factor over here is I don't think a lot of people have that intersection. But if you are getting bridged into the commercial world, the agency loans are typically, the loan size has to be $1 million or more. We do, just for some background, we do deals, you know, the largest deal we have $30 million, right? So the loan is pretty large, but with agency loans, it's complete because it's non-recourse. They don't like, it's almost a 2 separate world. They don't like, they do pull your personal score. You only need like 650 credit scores or whatever, you know, and it's a lot easier, but because they look at assets.
That's
right?
actually maybe lower than you need to get a residential loan these
exactly.
days.
Yes.
Whatever.
Yeah, I keep on thinking 750 is the number before I got into the commercial side, and when they told me 650, I'm like, oh, okay. I was thinking 750. I'm like, dude, yeah, I'm probably around there, and then they're like, no, 650. Anyone can get it. I'm like, oh yeah, 650. Yeah, definitely.
Hey, I want to ask Leka. Leka, have you borrowed any money lately for any residential projects? Can you hear me? I don't see her beautiful face, but I can see her name. How about Justin? Justin, can you hear me? Anyone? Paul? Hey, Paul. I'm looking at the people I know would be borrowing residential money on a regular basis to see how they're doing. If anybody's borrowed any money. So Leka or Paul or Justin. Can you guys hear? No? Not at all? I see Paul's trying to connect. Well, let's talk about other stuff.
Sometimes
Marissa,
it just takes a second to get off mute.
Yeah. Will you guys, Justin or Leka or Paul, speak up when you can get on and hear us? But you guys, I wanted to have. Oh, there's Justin. Can you hear me?
Yeah. Sorry, I had to get off my Bluetooth and reset it.
No worries. Have you attempted to borrow any money lately?
I have Flynn family. They've been great.
There you go. So, have you talked to them, Katrina?
I haven't. I need to.
Oh my God, you are like a perfect candidate to work with those guys because you own other properties, and so they will cross collateralize for you. You absolutely should put them on your speed dial and call Beth or Matt over there. If you need their contact information, let me know.
All right. Yeah, I'll send you a message.
Okay. Yep. Good stuff. Anybody else? Leka, can you hear us? No? Okay. So Marissa, can you jump on?
Yeah.
I wanted to just jump on and for anybody who's listening, Marissa is like an expert. We're going to have her on the podcast soon. Did I actually send you the booking calendar? Are you booked or anything?
I'm not booked yet. I got to re-click and reschedule.
But I sent you the calendar, right?
Mm-hmm. Yeah.
Okay, good, perfect. So Marissa is an expert at the zero down loan programs. If you guys are running with any buyers or retail buyers, it's just good to know. Why don't you update us on that world? What's going on there?
Sure. So I do homebuyer education classes, both in English and Spanish. And then I meet, obviously, all of us are in the business of knowing lenders and things like that. But I've really honed in on these programs for first-time homebuyers because that tends to be the majority of my clients. So some of the programs that I know about, for example, include either grants or silent second loans. So the one that's most popular is the Washington State Housing Finance Commission. And that gives buyers up to 3% towards down payment and or closing cost. There's some limitations in terms of income levels, but it's pretty high for standard retail buyers. I think around 140,000 is the max income limit, which is, again, high for most first-time homebuyers. And then with that, you have to take a 5-hour class, which I teach pretty much on a monthly basis. Just recently, the state commission is allowing them via Zoom. So I do have next class on Saturday, June 27th via Zoom in English. If anybody's interested in taking it just to get to know the program, or I'd be happy to talk to you offline about it. And in order to teach those classes, both as a realtor and a lender, you have to go through the 8-hour certification process through the state agency. But you can find out more information online. And I could send Julie the list of links and all that to send out to everybody. But it's Washington State Housing Finance Commission.
If you
So
have
that's one.
you can drop it right in the chat if you're able to do that.
Okay, I'm on my phone, so I don't know if I can chat from my phone, but let's see here. Oh yeah, I can. Okay, let me do this real quick. Multitasking.
Awesome.
State Housing Finance Commission.
Type with your thumbs too.
Yeah, I know. I'm trying to hold my hold my phone and type at the same time and look at. I don't know if I should be looking at the person or at the camera, but anyways. So that's one program, and that's really popular, and that's dependent on funds. Each county has different income limitations, right? So what's in Yakima versus King County or whatnot, it's kind of different throughout the state. I focus on King, Snohomish, and Pierce, mostly South King County, honestly. So that's been my specialty. And then the other programs are more lender or bank specific. So the next one down that I refer people to is Bank of America. They're giving a grant, $17,500. One thing I forgot to mention about the State Housing Finance Commission is because it is a loan, it's not a grant, then buyers do have to pay it back either when they refinance or sell their home. And it does affect the interest rate a little bit. So usually by 0.2 to maybe 0.5%, but it just varies depending on, a variety of factors and how well qualified the buyers are. And their restrictions or their rules have gotten a little stricter since COVID. So prior to COVID, the credit score was a little bit lower. I don't have at the top of my head what it is now, but most of the information can be found online or through one of the lenders listed on the website that I provided in the chat. So second up is Bank of America, $17,500 grant, and that's based on geography more than income. So it's basically the census tract. So what are the low to medium income or middle income neighborhoods designated or categorized by the census tract? And I think you have to, I'm not sure if you have to go through an online webinar or something, but you definitely don't have to go through a 5-hour class like you do with the state. I've been trying to talk to the state into allowing less than 5 hours, because doing a 5-hour class via Zoom can be like a huge conference, but we just take breaks every hour. And with Bank of America, you can work with most loan officers. You don't necessarily have to work with a loan officer who specializes in that program, although it helps to know the details and stuff. And again, I have a list of contacts I'd be happy to share with Julie to send out to folks. And then there's other programs that are also more bank specific, like Banner Bank has a down payment assistance program, which is up to 1%, that gives 1% of the 3% down. And they also do the State Housing Finance Commission as well. BECU has a grant program that gives up to $7,500 for first-time home buyers. There's also an income limit, and I think it's around $130,000 a year. And you have to be a first-time home buyer. They also do sometimes some discounted rates, like if you're an Amazon employee or if you work at certain companies. I don't have the list in front of me, but that's similar to people like Home Street. Home Street Bank has a huge affinity program with a lot of universities and a lot of people who work in the medical field, and they get a portion of the buyer's agent's commission. Depending on what that percentage is, if it's 2 or 3%, will determine how much we give back to the buyers. But those are some ways that retail buyers can find money to pay for a house, basically, and qualify.
This is all ninja stuff, right? Nobody, unless you focus on this, I think it's super valuable information. We're going to have Marissa, we're going to get her on the podcast to do a deep dive on this type of stuff, but super helpful to know about these programs, because not all of us I don't deal with a lot of first-time home buyers all the time. And when I do, I feel like I'm stupid, that I'm not really helping them well. So of course, I like to know people like Marissa, who can help me out with that sort of thing. Very valuable information. Love having you as part of my network. Thank you.
Thank you. Thank you so much. Thank you, everyone. And again, feel free to reach out to me if anybody has any questions. Some statistics that are really good to know, for example, is that about 40% of buyers are first-time home buyers, which is a huge market. Even a more huge market or statistic is the fact that more than half of first-time home buyers come from the Hispanic community. And so those are little stats, because I am bilingual and majority of my clients are Spanish speakers. There's a huge difference between, first generation immigrant versus millennials born and raised here in terms of knowledge, technology, types of jobs that they have, et cetera. But those have been my specialties, and I love teaching the homebuyer education classes.
There you go. Now you have somebody else to add into your direct dial would be Marissa, especially, if you need assistance on any of that, like a partner for Spanish speaking or whatever. I love it. I love it. Awesome stuff. What else is going on, guys? We appreciate you.
Julie, sorry, I'm back. I was on another webinar and I couldn't, but I heard your question, and currently I have not bought a flip this year because I'm just waiting for the fall time. However, I have done a lot of cash out refinances with Albert Bowie. So he is a great resource for any kind of cash out refinance. I've also gotten some amazing rates on a conventional mortgage from UWM, also through Albert. But also, I heard that certain lending is back in the market, lending. So they would be a really good resource to reach out to. You all know Nee. Reach out to Nee if you want to just get like a hard money loan.
Yep. Yeah, maybe we'll I think what we'll do is certain lending is sponsor and preferred vendor of Seattle Investors Club. And so maybe what I'll do is maybe I'll record a little commercial with Nee and throw it into the podcast and let everybody know they're back in the game. Absolutely.
Yes.
Yep.
Yes.
Good stuff.
Sounds
there.
good.
Thanks. What else? Anybody have any questions? I'm keep looking back in my rear view mirror here, looking for my stager, but anybody have any questions on anything they're working on this week?
I have a question. Does anybody know of portfolio lenders that allow a max DTI that's higher than 45%? I keep seeing 43 to 45%, and I have a deal that's about to fall off the radar. Just trying to figure that out.
Albert would actually be a great person to talk to about that. Wouldn't you say, Leka? He's going to know all the resources. Do you know Albert Bowie?
Yeah, I think talk to Albert, talk to Adrian Chu. He's another source. Yeah.
Do you know Adrian, Marissa?
Adrian, yes. Albert, I think I might have met once, but I'm sure I can find their contact info.
Yeah, if you need help.
Yeah, they're on WARI and the Seattle Investors Club Facebook pages.
Debra, I think you were going to say something.
Yeah, I was going to say something if it's time. I just became a member, so really happy to be here.
Yay, thank you.
I have a question. I just sold a house where it's closing in 2 weeks, and I'm going to have about a $35,000 capital gain. And I'm wondering, I don't want to do a 1031 exchange. The house is a rental. Does anybody have any ideas for alternative ways of closing a deal where you can avoid the capital gain.
Did you
Other
already
than
sell it?
Not yet. It's closing in 2 weeks.
Ooh.
And I have some flexibility to change the contract if I want.
There's
Yeah.
something called a structured sale. And I know that Bill Exeter at 1031, Exeter 1031 knows about it. It's an alternative to a 1031. I'm actually going to try, it's one of my topics that I'm interested in right now. I was telling Joe, I'm trying to get somebody on the podcast specifically on that subject matter. But in the meantime,
I have somebody, by the way, that you might want to talk to, one of our strategic partners.
there you go.
Yeah.
Does cost segregation work in this case?
Cost segregation?
Yeah, it does. So Deborah, are you a real estate professional?
I'm not licensed.
But are you taxed when you file
Taxed as a
tax?
real
Are
estate
you a real estate professional?
No, passive income.
Gotcha. Yeah, because that may be a one way to go. And again, it's this year, at the beginning of the year, that helps you kind of plan the rest of the year. But there's a cost segregation does work on this case, answer Leka's question, but you have to be a real estate professional and actively participating into the projects. So if you have a good CPA, you should probably work with your CPA on tax planning on that. Cost segregation, it's essentially, but again, because single family, it's a little harder, like, because break-even point is about 500K. If you invest into a projects, then you can kind of do that. Yeah.
I'll say that we just recorded another podcast with Natalie Kaladi, and I highly recommend that you reach out to her, and she will immediately be able to help you. She's an accountant. My screen is glitchy. Do I look glitchy to you guys? No. Okay.
Is she the one that did the tax?
Yes, yes. And we just
watched
recorded
that last night.
Yeah, Joe, we didn't release that. Did that just come out, Joe? Not yet. Okay. We just
No, it's the older one I watched. It was several weeks back.
Yeah, we just did a new one that you guys haven't heard yet. And long story short, we covered exactly what Elisa's talking about. And I just think you should reach out to her directly and go over these questions with her. I know she'll be able to help you out.
Okay, thank you.
There's also a Delaware's trust. So two people I think you should talk to is like a CPA, what Julie has recommended, and the other is what Julie was saying, Bill Exeter. So these are the two people that you need to talk to. Yeah.
And Deborah,
which trust? The first, I have Bill Exeter. Who is the first one? Something
Natalie,
trust?
the CPA. Yeah.
Okay.
So Deborah, had you talked about this a couple of weeks ago? It seems like I remember trying to reach out to you, but I couldn't find your contact information, and maybe it's because you weren't on SIC. Had you talked about this maybe a couple of weeks ago?
I don't think I brought it up.
Oh,
I put, it's the houses in West Seattle. I put on Zillow for sale by owner, and I had an offer 2 days later.
So you need a little more lead time for this alternative, but we have a strategic partner who they have a number of different things that they do, but basically they can use an installment sales trust or I can't remember there's a couple of other different products that they can help with, but they need some lead time. So if you're closing in 2 weeks, that's going to be too tight. But if you can push it back at all, that might be an option. But I'd be more than happy to introduce them to you to see if it might be a good fit. They'll tell you if it's not, because there really needs to be a certain dollar amount that you need to be saving in terms of capital gains for it to make sense. But it does allow you to get outside of, having that like kind exchange restriction with a 1031, and you can either reinvest your funds into something else or just have a stream of income with a promissory note.
Hey, Marishka, that sounds podcastable.
It does sound podcastable, doesn't it?
It does. So let's co-host it.
Okay.
Yeah, I'd like to learn.
Anybody who wants to co-host a podcast with me on a great topic, and reach our audience, hit me up. I'm available. I'm always looking for topics. I love creative seller financing and all this other stuff too. So
has anyone ever done a Delaware statutory trust or a statutory trust?
Yeah, I have, but that's more if you want to invest and not be actively involved.
So So what we're talking about is something that you may or may not decide that you want to invest, but it still allows you to defer your capital gains potentially indefinitely.
What about Elisa, or somebody may know that throwing your money into a opportunity zone fund, would that be something?
Yeah, Opportunity Zoom Fund, we've kind of dug into very deeply in 2018 when it first came out. There's some downside to it. I mean, it's 10 years, but the legislation is only in place since 2018, probably about 7 years or 6 years remaining. So there's some questions on that, but Opportunity Zone in jest is something that you can't throw your money in. In fact, it's not only your capital gain, but also stock gaining. Like when you sell the stock and there's a lot of gain, you could actually put it into Opportunity Zone and get that deferred. Now the rule of thumb over there is on 7 year you get, I think it was 75% waived or something, and if you hold it in 10 years, then it gets 100%, pretty much it just washed off.
And we've done a deep dive podcast on this with the guys over at what are they called, Joe? Do you remember? Joe Allis and those guys over at Smart Cap. If you look back through the podcasts, either Joe Allis or Tim Schultz, then we covered this in detail with these guys on opportunity zones and all the rules. But it seems kind of like, that's kind of like if you need to throw your money somewhere.
Yeah.
The hardest part about all this stuff is finding a replacement property in time if you're doing
Correct.
1031s and all that other stuff. So we probably just gave you too much information, I'll say.
Well, I can dig. I appreciate it.
Yeah, but again, I'll go back to like the best person you talk with is Bill, because he knows all sorts of ninja stuff about 1031. I use him for multiple of my properties. And other things to consider is also you would do a 1031 because oftentimes the challenge is finding a property. But there's a structure called a tenant in common structure as well, which we put some deals together in the past, which you actually it's like a partnering, but not really partnering. You own a piece of the property. So we do apartment buildings, obviously. So I've participated in a tenant in common where someone else has a deal, but they don't have enough money to buy, right? And then so we kind of combined our power. So it's essentially a two owner, but you each have your own piece of pie. That could be a 1031 opportunity as well. Just things to kind of think about, but Bill should be able to kind of go through all these different kind of options. Yeah.
Speaking of partnerships and so forth, I've got somebody reaching out to me and has some cash and is looking for to bring their cash and partner with somebody more experienced on a deal. I was going to look through there. If anybody has a deal I think he said he had like 225,000 to work with. So anybody who is looking at deals that has experience, I'm trying to find my email on that, might, let's see. He's in the Tacoma area, has a full-time W-2 job, blah, 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 blah. He's looking for some single family BRRRR opportunities. And he's got 225,000. And he's working with certain lending on some hard money. But he wants to partner up with an experienced investor out in the Tacoma area who he can ride along with and bring his funds in. So if that sounds good, Justin or anybody to you guys, this might be somebody I can introduce you to. So
Julie, I'd be happy to chat with him.
Okay. His name is Kasem. And
is he looking to invest in a flip?
He's looking for BRRRRs. So not necessarily a flip, he says. He's looking for
he sounds vaguely familiar. I don't know.
Yeah, I'm happy to introduce you, Leka. You'd be a good person, I think, for him to talk to. But he's looking in Tacoma. I don't know how much you do in Tacoma.
Some.
Okay, but yourself or Justin, if you have anything going on, you'd be a good candidate too. So there you go, guys.
Okay.
I will send that to, I will introduce him to both you and Justin. How about that?
Sure.
And you guys can take it from there. Anybody else got anything that they're working on this week they want to share? Sorry, multitasking here. I've got a great listing coming up here in Ballard, under 900, big, over 2,700 square foot house that definitely has the potential to have a separate entrance and probably rent the basement with tall ceilings down there. Could be, it's going to be a good one coming up in the Low Heights neighborhood. Watch for that coming if anybody has any interest there.
Hey, Julie, I have a project that I've been talking with the owner and providing him with his options. And he's got an old oil furnace and oil tank, and I talked to my oil guy, and he said that they're not taking any more PLEA applications after July 1st for the oil tank insurance, and that because the state is taxing so heavily on the oil that and it's the PLEA is actually ran by the oil companies and not by the state, that they may pull it all together, and even if you've registered, you may not have a chance to use the insurance because they're just pulling the program because of the taxes are so heavy. So something to keep an eye on, especially for prospective buyers who are looking at all those options. And he's actually doing free coring tests because that's a big part of his business, and he's trying to get more business before this shuts down. So,
Justin, is that in the short term? Is that relatively soon that the insurance may be going away?
There's no for sure that it's going away. Just no more new applicants after July 1st. You cannot apply for it anymore. If you've applied for it, you could still potentially use it, but there's a potential that in the future they could pull that program completely, just because they're which could be just posturing with the states to try to get them to not tax the oil so much, but it's something to note nonetheless.
What if you're registered? Are you going to be grandfathered in on that if you're already registered?
You're already registered, but they may come up and decide, hey, you know what, Washington, you guys are taxing the oil industry too much, that we're not going to provide the service anymore, and it's just going to end. So
that insurance is only available if the tank is functioning and you're currently using it, right? It's not available for anything that is no longer servicing.
Yeah, it's only if the ground is contaminated from the oil tank. That's essentially what it covers.
No, but so you can register.
You can register up to you can register up to July 1st. And like I said, budget tanks, they're doing free coring as a service to try and boost their business, to see if they can they want to get ahead of this and try and get as many try and find as many contamination things that to use the PLEA insurance program before the potential. It's not for sure. He says it's not for sure, but that it's something that because the oil companies they're essentially doing it as a service, and they don't have to. The state or nobody's making them do it. It's just they're just more of like, hey, it's the oil industry. It's they're I don't know all the super details of it.
You should post that little info on that on the Seattle Investors Club Facebook page, because that's good info.
Yeah, no, I was talking to him last night. I had to have that chance to do that. For prospects too, Julie, they're talking about some of those videos. That'd be a good topic to target to homeowners that have oil tanks that may or may not know about their options.
Messaging. Yeah, that's what, messaging. We're always paying attention as investors or brokers on what messaging we can use for lead generation. If for my VIP crowd, we are doing some ninja Facebook training that is sort of like a set it and forget it video view ad training. Actually, we're going to do that on June 1st for those of you like Justin. But but we're always looking for good messaging, you know, that we can set it and forget it. And I've learned how Facebook will actually retarget leads for me myself and do all the follow-up. So that's a good topic we can talk about, Justin, on that. Good stuff. Anybody else got anything? Anybody have any rentals available they want to tell us about locally? Need to get filled? Oh, you have the chance?
I still have the couple of wholesale deals. They're on the Facebook page if anybody wants them. Squim and Everett.
Squim and Everett? Flips or burrs or what?
They're flips. They'll
Okay.
be flips to somebody, but we're pushing them out as wholesale.
So you've had those out there for a minute already,
For a
and
week.
and you haven't had anybody pick them up yet?
No.
That seems like, why do you think?
We've had a couple of people go out and take a look at them, kick the tires, but no one's actually signed. As to why, I think Squim is a little bit far out. I don't think anybody actually wants
to go out to
Squim. I haven't found any buyers for that. The Everett one, there was a couple of people interested, but they couldn't make the finances work, and so we're JVing with I forget who is it now, and they reckon they will. Our JV partner reckons they've got a couple of people lined up for that.
Okay.
They're still available. As of now, they are still officially available.
All right. And you posted those on Seattle Investors Club or WARI or both?
Just the Seattle Investors Club.
Okay. All right. Anybody looking for a deal in Everett or Squim? There you go. I don't know. Paul, I don't know. Hemming, are you down by Squim anywhere? I don't know. Or he's still trying to connect. So, all right. Anybody else got anything? I highly recommend, if you guys are really awesome podcast we did with Scott Smith on entity structures that I hadn't heard before on series LLCs. If you have not listened to that podcast and you have multiple properties or so forth, I would highly recommend that you listen to that podcast that was dropped, I think, a week ago with Scott Smith. Just as a reminder to go back when you get some free time and do that. Anything else? Anybody have any questions, or are we good to wrap up today?
I don't know if you can hear me. This is Paul.
There's Paul. Hi, Paul.
Yeah, I'd be interested. I'd be interested. We're just finishing one up in Port Angeles, so we go everywhere.
Yeah, so Gus and Paul, you need to connect on Squim. You'd be up for Squim?
Yep. Yeah, that's closer in Port Angeles.
There you go. Gus, how does he, or Paul, what's your number that Gus can reach out to you?
253-988-5531.
You got that, Gus?
I did. Thank you.
There you go. Good stuff.
I will call you, Paul, right after the meeting.
Great.
Okay, guys. You know, I don't know what you guys are focused on right now, but I'm focused on, just anybody, what are you guys focused on? I'm focused on, of course, some lead generation. What's that? Oh, somebody's talking. That might be Gordon there. I think my stager's showing up, guys, so I'm getting ready to wrap up here. Anybody want to add anything as we wrap up? No? Okay. Over and out for today. Thank you. Thumbs up, guys, for joining us today. Marissa, book on the podcast, sister. Okay.
Will do. Thank you.
All right, and so Leka and Katrina and Justin, I'm going to introduce you to this guy that has some funds looking to get connected with somebody and maybe doing a partnership or joint venture, bringing his money in. And I'll follow up with you guys later this afternoon on that. Good stuff. All right, guys, I'm out. Ciao, ciao.
Yeah, thanks.
See you.
Bye.